Hello, welcome to the special summer edition of Market Call. I'm Michael Hainsworth. For the next hour, David Burrows is here, president of Barometer Capital Management, taking your calls and email messages and tweets, too, on North American large caps. There he is. Give him a call, toll-free, right across Canada. It's on my dime at 1-855-326-6266. Market Call at BNN.ca is the old-fashioned internet way to get a hold of us. All the kids are on the Twitter now, and so are we at Market Call. David, welcome back.
Great to be here.
You know, we got the word out of La Belle Provence today that Jean Charest wants to have a $1 billion fund, I suppose, to tap into to prevent foreigners from taking over our national assets. And then on top of that, he wants to change the way those foreign takeovers work. In the world in which we're operating today, does that make sense to you?
Well, does it make sense? I think it highlights a reality. We're living in a world where policy intervention is having a bigger part in the way markets operate. And I think the difficult thing is it remains to be seen whether, in fact, maybe that causes markets to trade at lower multiples. When you have policy intervention in any way, I think ultimately it creates more questions than it does answers. So, you know, Canadian markets over time have had some rules that were less shareholder friendly than others. And if there were a way for boards to intervene in this case, not giving shareholders a vote in the case of a takeover, I think it's not a good thing for Canadian capital markets. Do we even have a level playing field at this point? You know, I could understand why you might not want to have a company's patent portfolio sold off to foreigners or specific assets. You know, what spurs this, of course, is the Rona takeover. Right.
We're talking about hammers here.
Right. Right. I mean, this is pretty straightforward and pretty overt. I mean, obviously, it's a populist move, in my opinion, and it would cause me to at least raise additional question about investing in Quebec-based companies.
Tell me about what you're investing in right now, if anything, because we've got the low volume, the high volatility, and we're moving into September now, and that's traditionally the worst month of the year for equities.
I think this is a very tricky market, both for private investors and professionals alike, because it is a very thin market. We're in a very news-driven market. You've got policymakers on one hand trying to support things and economic data on the other, which is not so friendly to markets. And unless you are the most agile of traders, I think you really have to focus on key, well-established themes in this market. Because certainly there can be money made in, for instance, this risk rally that's going on right now. The question is whether that's sustainable, and I question that right now. So we're trying to keep it simple and focus on key themes that we know have been in place for some time and don't appear to be changing.
So for investors who may be underwater on particular equities, would you sell into the strength that we see from time to time?
I think you have to consider your situation, and if you own a lot of basic materials companies that have been good over the last few years but have had a series of lower highs over the last 18 months, I think you have to consider the opportunity to lighten some of that into this market strength. Arguably, there's a lot of people that are captive to markets and have to be there and are trying to generate a return. Most hedge funds are way behind the market. Most equity funds are well behind the market, so they're trying to catch up. You might want to take advantage of that bid just to reduce some of those positions and then focus on that yield theme that looks like it's got some longevity to it.
David Burrows is our guest. He's the president of Barometer Capital Management. We're talking today about North American large caps. You've got a question, we've got a line available now. Call us toll-free, 1-855-326-6266. And when we come back after the break, we'll find out if David is thirsty for shares of Starbucks.
Before